All right, Bulls and Bears back with another dose. BX4 News back in the building. Let's go ahead and get into it, folks. Lots to talk about today. Of course, tariffs, inflation, that's everywhere. But we're going to take a deeper dive today into the economic situation and what's happening with a lot of consumers. Also, we're going to get back into investing. What am I investing in? What I'm selling, what I'm holding. And we're going to get into that later in this video. Please make sure you're subscribed. We've got a lot to get into. First, let's talk about the recent Fed meeting. Jerome Powell basically came out and said, as we all probably expected, that inflation is going to be triggered or even worsened by tariffs. And we're just going to play a brief excerpt here. And the central bank people, they act like they know exactly what's going to happen, but then they come out and they say they're data dependent. Right? So if they're data dependent, then what good are they? So anybody can sit back and see what's already happened and see the data that's already out there. They need to get out in front of what they think is inflation. That means they need higher interest rates. Well, somebody is not agreeing with higher interest rates. And I think you can guess who I'm going to talk about. Calling for more rate cuts. Right? We'll talk about that here in a few minutes. But first, an excerpt here out of the recent Fed speech here and Q&A session, Jerome Powell here.
Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey respondents. Both consumers and businesses are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal.
So in other words, prices are still going to go up. They still have the 2% inflation goal, even though we've seen way higher than 2% over the past few years. They're still going to try to shoot for 2%. And if they miss it, and if inflation is 3, 4, 5, 6%, they're not going to try to raise rates to offset that. They're still going to have rates still run hot or run higher, or inflation run higher. Unfortunately, that's what he's saying.
The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected. In 2027, the median projection is at our 2% objective. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves.
As a one-time price.
Okay, so how much of it is tariff? So let me say that it is
Excuse me.
going to be very difficult to have a precise assessment.
How much of it is tariffs? Take a listen.
Of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation.
So there you go. A good part of it is going to be from tariffs. What's a good part of it, right? More language where you really don't know the impact of what tariffs are going to bring to the table. Now, we should see deflation in some areas, but not so fast. Take a look at what the current president is calling for. And I should say, clarify, you should see deflation. Well, normally when the consumer is this loaded up on debt, you start to see deflation because people are forced to pull back on spending. But look what's happening here. We got calls out here, the president saying the Fed should cut rates to ease the economy's transition into tariffs. Wait, so if tariffs are going to be inflationary, wouldn't you want to raise rates to offset the inflation? Or is there too much debt out there and the people with the debt, they cannot withstand higher rates? So that's why we need the rate cuts, right? So I think that's what's going on here. After largely staying out of the Fed's business for the past 2 months, the president encouraged central bank to cut interest rates as a backstop for his tariff plans. So my question is, if he's going to turn the economy around, so easily, like he talked about for many, many months, why do we need to pressure the Fed to cut rates? It's the low interest rates that got us into this mess, folks. And I'm not political. I don't really think either party has a solution to what's going on here without some big transformative changes. All I'm saying is the rate cuts is certainly not going to make things more affordable for people. In fact, it's probably going to make prices go up even higher because you have the tariff effect, which, if you believe Jerome Powell, is going to have an impact. If you believe all the CEOs or most of the CEOs out there, they're saying that tariffs are going to have an inflationary impact, that they're going to have to raise prices. Prices are going to go higher. Bring lower interest rates into the mix, making it easier to borrow more money or to get bigger loans for the payment that you have to pay. People are going to qualify for bigger loans and run up more debt, basically. And that's also going to be adding to the inflation fire. And to make things even worse, basically Powell came out and said he is projecting 2 rate cuts this year in 2025. So expect more inflation. Nothing dramatic as far as a crash or collapse in prices. No bubbles going bust. If this is what they continue to do, and we know that interest rates is just part of the big picture as far as the cost of living. We know that the banking system is probably the biggest fuel to the fire when it comes to inflation. Until we rein in some of the money creation and the lending, and until we hold the banks to a more strict standard of loaning out money, then you're not going to see cost of living come down, and these bubbles are not going to be bursting. Now, it doesn't mean that I think it's going to be a good idea to invest in real estate, right, in 2025, because even if you make a decent return on rents, rents are only going up actually a tiny fraction in most areas. And if you look at the big picture, rents actually came down year over year. Let's take a look at that. And I should clarify, it could be an idea. It could be a good idea to invest in property if it pencils out, right? So if you buy a home for a low enough price where the rents are going to make up for your cost of carrying it and you're going to end up with a profit, obviously it can be good. But look what's happening in rents here. And rents actually came down a little bit, but here are the median rents across the nation by unit size. This is per realtor. 2-bedroom, the median rent is $1,887. That's up over 18% over the past 5 years. 1-bedroom, $1,583. See if I can enlarge this here. All right, and of course this is the median, so it's higher in some areas, lower in other areas. But compiled together, these are the medians here. A studio, $1,413, up over 9% in the past 5 years, folks. These are outrageous. A 2-bedroom, $1,887. And imagine if you have a family and you need a 3 or 4-bedroom. I mean, this is totally outrageous, folks. And there is actually a little bit of good news, and I've got more good news coming up later in this report. A little bit of good news. The median asking rent price across the 50 largest metros slid. It actually came down, shedding $15. Wow, you might be able to go maybe get lunch at McDonald's for $15. You're going to save an average of $15 a month lower compared to the same time 1 year ago. So there you go. For those of you that say I never have good news, rents are down $15 on average, $15 a month. And still on the topic of tariffs, we've got Nike. Is it Nike or is it Nike? I heard somebody on CNBC earlier say Nike, but then I've heard other people say Nike. Either way, Nike stock fell after warning sales could take a hit from the turnaround plan plus, guess what, tariffs. Well, here's the thing about tariffs. It may not be that bad, and I don't really buy much Nikes nowadays, but it may not be that bad because what I research here, in 2023, Nike's manufacturing in China was 18%, while 50% was actually in Vietnam. So you may not see that much price increases with Nike, but yet they're still coming out there and saying that tariffs are going to be a reason why the company could take a hit. And a lot of it you get what you pay for. I mean, I've got probably my best running shoes are Nikes, either Nikes or New Balance, right? So I think they're worth the higher price, especially if you're running. You don't want to get a cheap pair of shoes. You're going to mess up your knees. You want good cushion. You want them to be durable. So in some cases, I would say, I still have Nikes for running and stuff like that. But a lot of people just wear them because they think they look cool. Anyways, on to some other news here I want to get into. And let's talk about the outrageous home prices and housing costs right now. Home prices are so high in Florida that homeowners are really getting strapped financially. And when you see the home prices go up, it's nice as a homeowner to see that equity because you can sell it and get a bigger profit, of course. But if you're not selling, what happens? Your taxes just go up. What you're paying to Uncle Sam. Well, it's so bad for homeowners in Florida now. They're talking about ditching property taxes. The governor of Florida came out, DeSantis, talking about actually ditching property taxes, and it might even be up for a vote in 2026. That's very interesting. So if Florida does end up doing that, that could be kind of the test area to see what happens. Will the state's revenues collapse, and will roads not get updated or upgraded rather? Will infrastructure not get rebuilt or repaired because the lower tax revenue? We'll have to see how it plays out, but it's very interesting that they're even talking about it. Now, I think it's very unlikely that that will happen, but it would be interesting if it did happen to see how things worked out in the state of Florida. But actually, I should kind of go back and rephrase that because there's 8 states, including Florida, that don't have a state income tax. And those states don't have potholes everywhere on their roads and bridges collapsing. So we can see already that elimination of some taxes doesn't mean the infrastructure is going to crumble. Right? That's for sure. All right, a little more possibly good news. Nvidia plans to invest hundreds of billions of dollars in U.S. manufacturing. So very interesting. They're set to invest hundreds of billions in U.S. chips and electronics manufacturing over the next 4 years, according to the Financial Times, citing the CEO talking about this here just recently. Nvidia's decision aligns with similar investment plans from other technology companies such as Apple, influenced by America First trade policies. So will this work? I mean, let me know what you think down in comments. If these jobs do come back to the U.S., how long until they set up here? And will it actually be good? Because yes, it'll create some jobs, but if they have to pay workers a lot more than they would in, let's say, Vietnam or China, aren't they just going to raise the prices? And won't all the components now be more expensive because they have to pay wages that are so much higher than some of these other countries? And to me, it looks like it could be, even though it looks like good news, right? Jobs coming back to the U.S. could be inflationary unless the cost of living comes down, and unless these companies can afford to pay lower wages, it's going to be inflationary because they're going to have to charge higher prices to make up for the higher wages that they're having to pay. On one hand, you could say they're going to avoid tariffs by coming here to the U.S., but then the higher cost of living and the higher wages might erase it, right? I don't think anybody knows exactly, but to me, that's what it looks like. It looks like a give and take, and things could end up being exactly the same when you look at the different inflationary versus deflationary or lower cost of living type of effect that we might have here. All right, folks, let's wrap it up here with a little bit of maybe humor. If you think these are funny, I think they're kind of funny. A couple memes here. My parents in their late 30s, looks like the Simpsons there. I think we can afford to have one more baby. Me in my 30s. We should find one more roommate or else we can't afford rent. Yeah, that sums it up here. People in their 30s now, multiple roommates just to afford rent, and they can't even pay their student loans on top of that, a lot of them anyway. What did we find out a few weeks ago? That was over 9 million student loan borrowers couldn't even continue making the minimum payment when they came off the forgiveness or the rescue plan. Pretty sad what's happening to a lot of the young people in this country. But yeah, parents in their 30s talking about having more babies, now not having babies, and on top of that, getting roommates just to afford rent. Crazy people. And here's another one. Someone posted this. I thought this was kind of funny. Here's how to fix inflation. Let the air out. Let the air out. And letting the air out, what does that mean? That means less money creation, banks being more restrictive on loaning out money. We know that's not likely to happen unless we see some massive change come in that really nobody expects, like a black swan event or something that brings the entire banking system down, like a derivative trade goes wrong or something that brings down this house of cards and easy money policies, folks. All right, next I wanted to bring up this chart here, folks. This gives us inflation every month going back to 2015. And we see that things were running kind of low, kind of cool on inflation between 1 and like 1.5% from 2016 through 2020, actually. Of course, starting after the health crisis, we saw things heat up. We see in the red here, got as high as 9.1%. The peak looks to be about the summer of 2022. Came down some, and now over the past 6 months, we've been 3% or less, except for January where we hit 3%, but starting to cool down a bit. And so this will be the true test, right? When you see what's happened here over the past 6 months or so, inflation 3% or less for the most part. So now if we see it heat up over 3%, then we know that tariffs is likely the cause, because we heard from Jerome Powell earlier saying he's not going to really know exactly how much of it is tariffs, how much of it's not. But I think this is a pretty good way to gauge it. If you see 3% or higher inflation, I think that's very easy to determine that that is caused by the tariffs. And let me know. I could be wrong on that. Please let me know what you think down in comments. All right, on to what I mentioned at the beginning of the video. I'm going to give you my recent trades, recent investments, and I think you're going to be pretty surprised. I took a small position in Tesla because we saw a 40% drop from the peak. Why just a small position? Because there's a lot happening with Teslas right now. There's a huge recall, a big backlash against Tesla, people trading in their Teslas. So I think there could be further downside. So this is just what I call a starter position, just to get my foot in there in case it starts going back up. At least I've got a little position in it. But I wouldn't be surprised to see another 20 to 30% drop, and that would mean total a 70% drop from the peak, which was over $400, right? So I'm going to add to my position. If it drops another 15%, and then 15% after that, I'll add more. And there'll be even bigger positions that I took here to begin with. So that's kind of how I do it. I'm kind of cautionary when a stock comes down. Once I see a stock hit bottom, or let's say there's a 50% drop and then it kind of bounces along the bottom for several months, then I'll start taking bigger positions, especially if it's a stock that's going to be around for a while. I don't think Tesla's going to be going anywhere. Even with all the controversies and everything, we're still seeing the electric vehicle space increase each year as far as market share. Right, but here's why I'm also being cautious, and here's why I expect a lot more downside. Look at this here. In latest blow, Tesla regulators, in latest blow to Tesla, I should rephrase that, regulators have recalled nearly all Cybertrucks. When was the last time you saw a recall where it was nearly all Cybertrucks, folks? That's crazy. Virtually all Cybertrucks on the road due to, and that's the 8th recall from Tesla-made vehicles since deliveries to customers began just over a year ago on these Cybertrucks. The National Highway Traffic Safety Administration recall, which covers more than 46,000 Cybertrucks, warned that an exterior panel that runs along the left and right side of the windshield can detach while driving, creating a dangerous road hazard for other drivers and increasing the risk of a crash. I think they're interesting looking vehicles. I probably wouldn't want one just because they're so new to the market, and as you see these recalls right now, I kind of, when a new car comes out, even if I think it's cool, I'll let it play out for a few years to see if it's going to be, one, safe, to see how many recalls happen. But hey, let me know what you think down in the comments. Are you buying one of these? I'm not. I mean, I don't have a home charger, so I wouldn't buy an electric vehicle right now anyway. Plus, I'm in California where they're telling people, like last summer, don't use electricity during certain hours, but yet you want me to own an electric vehicle to save the environment. So I'm still kind of sketchy on the whole electric vehicle thing. I know people have family that loves their electric vehicle, but that's just me, folks. So might dip my toe into a bigger position there. Also, still stacking silver, folks. Even silver's been going up a bit here. I think silver's going to be massive over the next few years. I think it's going to actually catch up with gold, believe it or not. And to wrap it up here, I just want to give a quick shout out to my super thanks, people that help out this channel. Thank you very much to the following, and these are screen names, so they might sound a little bit weird. UFO Mark II, that's Mark with a C, M-A-R-C 2, UFO Mark II. TSA Braden, thank you very much. TSA Braden for the super thanks. J-Rod Zay, Z-A-Y, J-Rod Zay, thank you for the super thanks. Really appreciate that. Bill G 6051, thank you very much for the super thanks. Bobby Seals 007, thank you. I saw you a few times, Bobby. You really appreciate that. Mike S, I've seen you many times. Thank you for helping out the channel with these super thanks. Really appreciate your support. And let's see, one more we have here. If I can navigate my screen here. Actually, more than one more, because there's a few months since I've done this. Pax OR32, thank you. Rick Enfeld 7472, thank you. And DJ Jojo, thank you very much for your support. As always, everybody, keep stacking. Let me know what you think about this. Am I crazy for going in on Tesla, even though I would not buy one right now? Just an entry-level position, small position. See how things go. Further drop, I might add to it. Are you with me? Do you think I'm crazy? Let me know what you think down in comments. Jerome Powell's statements saying that inflation is definitely going to be inflationary, but he doesn't know how much. Well, if it runs over 3%, I think it's going to be pretty easy to see that it's caused by these tariffs. And also, Jerome Powell coming out saying that tariffs are going to be inflationary. He just doesn't know how much. Well, as I talked about, if it runs over 3%, then it's going to be pretty easy to see that it's tariffs. Am I wrong? Please let me know what you think about any of this down in the comments. As always, everybody, keep stacking. Bye.